Hello, Oracles. Well, we've had quite an interesting week this week. We'll get into a bit of what was going on in the market, why the market has been tanking the last couple of days, how long it's going to tank for. Of course, nobody knows that for sure, but we'll go into my speculations and ideas as to what I think is going to be playing out in the market for the next couple of weeks till the end of the year and the next few months. Take a look at Tesla and we'll do a quick review of the gaps that are down below us. So obviously, if we are going to continue selling off as we are and have been the last couple of days, how much further will we go? Could we potentially fill some gaps? And this is why we talk about those gaps, is to discuss just that. We see what areas could we potentially fall down to. And again, when it comes to the gaps and stuff like that, the technical analysis again is just one of those. Typically, there's a trigger that causes something to happen. You can see things in the charts and say, hey, like we've been pretty high on the RSI. That's the relative strength index. We're pretty high on the RSI in a lot of areas, a lot of stocks, basically market wide in a lot of different stuff. And you're like, all right, well, you can see like we're due for a sell off, but like what causes it? And there's always something that happens to come up and causes it based upon timing or whatever it is. And this time around happened to be the FOMC meeting and them cutting rates some more. And typically cutting rates is good for the market and the market cheers that, but clearly did not cheer it this time. And there's some reasons why. So we'll discuss that shortly once everybody gets on here. What's going on, Sal? You are most welcome with that. And again, if you guys have anything, any stocks or ETFs or anything you want me to take a look at, I don't have a lot of time to really do a deep analysis of the companies themselves. That I would leave up to you guys. But if you want a quick stock chart analysis, I could do it here on the live stream, or I'll do it on my gap video. I can definitely take a look at that for you guys. So if you're interested in any of that, I can definitely do a quick analysis, just a snapshot look at what you guys are looking at. Just from my perspective, of course, none of it's financial advice, but just a quick perspective from what I see. What's going on, Hanif? How are you? Yes, happy Thursday. And let me know, I mean, have you guys been buying in this market? How do you feel? I can say it was, a few years ago when, Elon was selling and was Christmas time and we're like, what's going on with the stock? And a lot of emotions were out there and things like that. So let me know how you guys are feeling with all of this that's going on. I set myself up to buy, so I've been buying them well below where I wanted my cash percentage to be, but it's still at 9.5%. So I'm not going to complain about that. But I was taking advantage of these opportunities. I was busy at work today, so I couldn't really buy a lot more, but I ended up selling off more into the end of the day. So I may do a little more shopping tomorrow morning. And again, I'll run you guys through what my perspective is on what I think is going to be playing out. Lang, we've got inflation fear in the coming year, less rate cuts, Trump tariffs. That's a lot of it, yeah. Yeah, we'll get into that in a minute. Not selling Tesla, but thinking of buying more TSLY. So, I mean, I bought TSLY the day after the election. I had been in it for a while. I was actually upside down. If I had held onto it longer, now it's a very high expense ratio. You're going to have a lot of NAV erosion on it. So be very cautious with these. But because I bought it early on, had I held onto it throughout the course of the year, I'd probably be positive on it right now. It's not a game I'm playing. I'm doing a very small portion of it strictly for the income generation from this to be able to put into other things. And eventually it will play out where I will be positive on it based upon all of the income that I have coming in. It'll probably just take a year or so for that to happen. But inevitably, you turn the corner and you get your money back, and you're basically playing with the house money. But you're going to, if it continues to play out the way it has been with the NAV erosion, you'll eventually lose all of your initial capital. That's just, the nature of how it goes. They've already done a reverse split once. But with the income coming in, it will inevitably offset that over time. But then you're also paying into the expense fee that's in there. So for me, it's a very, very, very specific reason why I'm buying it. And it's just for that income generation to be able to add into all of my other plays right now. That's it. Otherwise, I don't recommend it unless if you're gonna be doing it for any other reason, I would not recommend it at all. I do know actually for some people, I do know a lot of people short it. That's one of the other reasons why the NAV erosion is so strong on Tesla because a lot of people were shorting it, and that just sped up that process. Yeah, and there's the other thing too. Tesla is okay while Tesla is upward. NAV might come down fast too. So just to give you guys a brief overview, like the yield max ETFs in particular, they will feel the entire downside of any stock movement. So they have synthetic covered call shares on all of the stocks and ETFs that they play off of. So for Tesla, that is playing off of Tesla stock, of course, synthetic shares. They don't actually own any Tesla stock in there. If Tesla goes up on a massive bull run, it will never appreciate as much as Tesla did. So, for instance, what we saw from election time until now, Tesla fell way behind on that. They did not appreciate anywhere near as much. Now, you're going to get that income generation coming in, but even with that, you're still not going to make as much as you would from Tesla stock. The thing, though, is for me, is I don't plan on selling Tesla stock. And unless I want to try to time it and take some profits, it's going to do me no good in the moment. And right now I'm looking at more in the moment cash flow generation. So for that, I can get cash flow generation for Tesla stock by going through Tesla. Now, the problem is the downside. On the downside, when Tesla stock itself falls, Tesla's going to feel all of that. It's never going to appreciate as much as Tesla, but it will fall down as much. So that is where you're going to find the most damage there. Now, if Tesla is going up, you know, trading sideways or going up slowly, which typically doesn't happen, you will get that. You will get the appreciation and you will get the income from it. I already saw that in the first month, and so Tesla's going to be paying out it's not next week. Is it next week? I'm not maybe it's next week that it pays out again. I'd have to take a look at the charts and see, but it may pay out relatively well again. So, what the strategy could be behind that one is more of a timing of it and saying, hey, Tesla itself for the entire market are on a downswing. I'm not going to be buying any Tesla right now. We'll just kind of let it slide down. Then when you see things turning around and going back up, you can kind of buy it at that point. So it kind of is like timing the market with Tesla, and it's almost more important to do it with Tesla because you're not going to get the full upside on it. So buying at the bottom to get the maximum yield on it is going to be the most important piece. So again, it's a very volatile play. It's something that I plan on having for at most 5 years because eventually I'm going to get to the point where I don't need any of the yield maxes and I want all of my other dividend plays to be providing enough cash flow generation where I don't need those at all. This is just to kind of give that little boost to my portfolio and speed that process up. My dad, market will not be for the faint of heart in the near term. Yeah, that's true. Continue to swap out equities for T bills. So, to his point there, that's kind of where we're at is the volatility, now the uncertainty. So we'll get into it now. So the reason the stock market sold off like it did was strictly because of the fact that Jerome Powell came out and we cut the rates, which is kind of what the market was expecting. So since they started cutting, we've now cut 100 basis points or 1%. We're now at a federal funds rate of 4.25 to 4.5%. Still some room to come down. What really did it was the fact that the unemployment numbers are not as good as we'd like them to be. And Jerome Powell said that we've avoided a recession, but we've said that in the past and then still gotten a recession. So some thinking is that he is saying this to try and convince the market that we are not going to get into one to kind of self-fulfill that prophecy and kind of spur it on so we don't get there. The problem is next year with the rate cuts, they only cut it. They cut their expectations from 4 cuts down to 2. So if they really wanted to spur on the economy, they would cut the rates some more, but they're not. So it's kind of counterintuitive and then it's kind of contradictory based upon what they're saying. And going from 4 rate cuts to 2, that's why REITs took a beating because anything that's sensitive to higher interest rates took a beating. REITs were one of them. I have Realty Income, I've got Vici Properties, and I've got Prologis. The three of them got hammered over the last couple of days. I added to them because eventually we're going to have the rates coming down. The rates are still going to come down next year, and that will improve the housing market and real estate, but it's going to now be longer. The Fed had told us before we're going to have higher for longer, and we're kind of now really getting even longer based upon what Powell said yesterday. So the market is reacting to that. So now only getting 2 rate cuts next year versus 4 is going to lead us to a point where we have higher rates, so it's kind of going to stifle the economy. And part of the reasoning behind it is because of the tariffs that Trump has been talking about, and tariffs historically lead to inflation. And if the Fed comes down on rates too fast, that's going to let inflation kind of get out of control again, and they don't want to do that. So now we're kind of in limbo, in a point where the Fed has told us that they're kind of waiting and seeing what's going to happen when Trump takes office. We don't have Trump taking office until January 20th. So now you've got analysts and all the algorithms out there trying to run math on, well, what are the percent chances of all of these rate cuts, of a 2%, of a 2 rate cut, 3 rate cut, 4 rate cut? What are the percent chances of all of those? And what do all of those mean for the economy in the timing that we would get those? So there's a lot of math that's going on, and it's going to continue to go on for the next month until Trump takes office and we get a better inkling as to what he's actually going to do. And then once he actually does these things, how is it actually going to affect the market? So near term, as I talked about on the Tesla video the other day, 6 to 12 months could be wild. So swing traders are going to do very well. Covered call ETFs like JEPI, JEPQ, SPYI, QQQI, those could do very well. Now, the yield maxes are also covered calls. So obviously, we saw volatility spike over the last couple of days. Volatility is great for options, great for those covered call ETFs. But if the market's going to pull back on that uncertainty, could be bad for those yield max ETFs. But we saw in 2022 bear market, JEPI did very well and held up very well in that time frame because that income generation coming in and the volatility allowed them to stay higher and lose less over the course of the year than most of the other than the rest of the market. So with that said, you start getting in all of that cash flow generation. You now have more dollars coming in to buy when the market's down. This is the exact reason why I built up my portfolio to have a lot of dividends and this coming in. And to my dad's point, you can put it into T-bills, because T-bills, if you're going to roll it over maybe month to month or a 3 month, they could be paying out 5 to 6% right now. So those yields were going up significantly, and you have a potential of having that cash flow coming in, and it's a lot more solid and stable when you're talking about a portfolio. You're not going to have that volatility in the T-bill because it's solid right there. And then when it matures, then you're going to get whatever the yield was on that. So that could be a good play to get that cash flow coming in, to be able to, utilize it to buy whatever else you want in the market. But it's going to definitely be, at least for the next 2 months, pretty uncertain. So I think tomorrow, we're probably going to see a little more selling. What ends up happening is the last couple of weeks of the year, a lot of people go on vacations and they don't want to have to worry about what's going on with their portfolio. So they sell out a lot of their stuff around now. And then it just kind of like floats up a little bit for the last couple of weeks of the year because the volume is so low and there's really not a lot of action going on. And then come the first of the year, everybody comes back from their vacations and they kind of reassess where the market's at to decide what they want to do. So the next 2 weeks, so tomorrow we may see some more selling, maybe a little bit of buying into the end of the day, but chances are it's probably going to be another rough day in the market. Today almost seemed like it was going to be green, and then we had a little bit of a sell off at the end of the day. Could be something very similar tomorrow. And then the next 2 weeks, now, of course, we don't have any trading going on Christmas, nothing going on New Year's Day. So a couple of off days, and they're in the middle of the week. So the next 2 weeks are going to be kind of an unusual trading period time. So it might not be too bad. I truly don't know. But historically, you kind of see that float up. That's like the Santa Claus rally that they talk about. We might see it float up a little bit. Me personally, I have a couple of my ETFs that I was planning on getting out of, but they get end of the year dividend bonuses. So we're close enough. I'm not going to worry about any downside risk on those. I'll wait till those mature and get to the end of the year, and I'm going to sell those off after the beginning of the year. And then I'm going to take that money and redistribute it into my portfolio now that I've dropped myself down to 9.5% cash. And I might end up getting it down to 9% cash tomorrow, just because there's buying opportunities and I want to buy. Now, maybe a month from now, we have even better buying opportunities, but I don't know that. So I'm just following what the plan of my portfolio is. I add a little bit. I'm going to toy with, like I kind of pay attention all day long and buy when I can. So I might toy with, maybe expanding that out. Maybe I'll just take a look at the next day. Like for instance, today, the second half of the day, I didn't have a chance to do it. So maybe like, hey, in the morning, I'll set some buys for the day. And I was like, hey, this is what the portfolio showed me I should buy. I'll make those buys, let it go, and then I'll reassess that night and do the same thing for the next morning. And then maybe I'll expand that out and maybe I'll do it at the end of the week. I don't know. I'm just toying things out with how often I'm going to DCA in. Um, and I'll just play with it from there. But as of right now, the uncertainties in the market and the drawback on us, I think we're going to see definitely at least a month, maybe two, because don't forget, right when Trump is taking office, we also have earnings coming out. And so we're going to see how the holiday season is for a lot of retailers. We're going to see what the unemployment is looking like, if there's any more layoffs going on, because if companies didn't do well during the holiday season, they might have to lay people off. So even earnings season going through February is going to be rough as well. So realistically, the next 2 months could be kind of wild. So just be cautious out there. Hanif, what stocks give some good, decent dividends? That is a very broad question. If you actually take a look at my videos, if I don't know if you've seen them, I did do my top 5 favorite, or my top. It was ultra yields. I think I did the ultra yields. I did the REITs, BDCs, and MLP. So I've got like Hess Midstream is in there. I've got Realty Income, Vici Properties, Prologis. Then I've got some of my favorite ETFs that are in there. Like SCHD is one of my favorite. That's going to do very, very well. I think that's going to do well. So SCHD is one of my favorites. DGRO is awesome. CGDV is very good for ETFs. Those are for me very long-term ETFs. The yield isn't very high, but they're going to grow and it's going to be following the market. They're typically going to do at least as well as the market and give you that cash flow. Individual companies themselves, I love Visa. Visa and American Express are two of my absolute favorites. Cintas, they actually came out today. They had earnings that were extremely good. They even raised their forecast, but they lowered the top end of their forecast, just kind of citing the uncertainty and, with the jobs market potentially being in question for next year, very much like UPS and FedEx, Cintas kind of follows the labor market and shows how the health of the economy is. And they're anticipating maybe not as good as expectations were for them, but still some growth. But Cintas, I love. It's one of my favorite. I don't even know, can't remember where I even saw this and why I picked it up, but I see the trucks all over the roads. And they're one of my favorites. Favorite growth stock. They had an extremely good year, and they sold off like 10+% today. So I definitely added more to them because I absolutely love them. You can go with the Pepsis and Colas of Coca-Colas of the worlds. And they're solid. They're going to give you a decent yield. They're going to see some nice dividend growth, 5 to 7% you could see from them dividend growth, which is nice. There's a lot of better options out there depending on how you want to play it. But again, if you want to go back and check out those videos that I made of those, of all the individual ones, I kind of broke them down by category. So go ahead and give those a check and see what you think on those. And if you have any other questions, let me know. Tesla payout at the end of the first week of every month. Oh, that's right. Tesla is actually paying out twice this month just because of the way it fell. So it paid out the first week and it's actually paying out the last week of this month as well. So thank you, Lang. Dad, ask yourself if you bought that stock only because it was going up. That is the stock that will fall the hardest. Yes. So those are the things, and this is one of the things that my dad taught me early on is what you see going up, the faster it goes up, the faster it's going to fall. The other thing to pay attention to also is when you're coming out of an entire market sell-off. Like for instance, 2022 is the bear market's a lot better example than like a couple of days sell-off. But when you see a 2022 bear market, what companies came out of those the strongest, the fastest? Those are the companies that people want to get into the best. Those are going to be the best companies overall. That was typically the Magnificent Seven. Tesla lagged behind during that strictly because the interest rates were high. But they're also, because of the way Tesla is traded, is you have to be very careful. Because as you can see, we saw the Palantir, SoFi, Tesla, those boomed right after the election. But I told you guys on here, I'm like, that's a lot of sentiment and fluff that is not fundamental based that drove it up as high as it went. So be very careful. That's why it fell almost 11% yesterday. So it's one of those things where, hey, a long-term investor for Tesla, I think it's going to be perfectly fine, but you have to understand that it's going to be a very wild roller coaster ride. And if you can't stomach that, you may want to find another option or just set up a DCA and don't even pay attention to your portfolio because that's just how it's going to be. And you have to understand that. Natalie, is it 450 or 390 for Tesla tomorrow? Well, you know what? Let's take a look at the charts. Not like me looking at the charts is going to determine one way or the other way which way it's going to go. It's not like it's my crystal ball, but hey, it's fun to look at and make some guesses. So let's take a look see at where we're at here. I'll jump on. Mm-mm. Present share. All right. So looking at it, so we're at 436. So it popped up here at 48. And, it's funny because Gary Black had said 478 is where he was looking at for the top. So, kudos to Gary. Pretty spot on here at 488. And I mean, even realistically, the close of a day, the high was about 480. So, kudos Gary for being spot on that one. Obviously, who knows what's going to happen? Maybe we bounce from here and go up higher, but looking at that peak, that was pretty good. So coming down, I mean, looking at the gaps, gap at 358, gap at 345, gap at 324, gap at 255, gap at 218. And I was even looking at other people out there talking about gaps and how we've been filling them in just indices, the Dow Jones, the S&P 500. There were gaps that have been created all over the place. And a lot of these gaps stem back to the election. And I think a lot of these companies, a lot of these indices are going to retrace back to the gaps that were created from the election. I think it is going to happen. I just don't know when. I don't know if it's going to happen soon. I don't know if it's going to take the same time. So, for instance, basically, a month and a half to get here. Is it going to be a month and a half for us to fall back down? Truly don't know. So that's one of the things to pay attention to is what's going on here with the gaps. So as far as tomorrow goes, going down to 390, don't forget 400 is always going to be a strong level. And looks like, right here, we kind of stopped at this level here. It was the 436 was a strong level of resistance on the way up. We stopped at it here. So we stopped at it on the way back down. So I don't think we come down to 390. I mean, if we get a massive sell-off, I mean, looking at where 390 is, that's right here. So that would be another stopping point is 390. So it looks like, we hit it here as a resistance on the way up, hit it here as a support on the way down, and then bounced off of it from there. So 390 looks like it could be a level to stop at, but so could 400. So if we continue to come down, that's what I would pay attention to tomorrow is, do we hit 400 or do we drop below that and hit 390? Now, that is still almost another 10% drop. I don't know if we're going to drop that far again tomorrow, but hey, who knows? We did it yesterday. Who says we can't do it again tomorrow? So just one of those things that is kind of on my radar. And then popping back up, we would pop back up to probably around the 450. If we went back up, we might go back to that 450 level and kind of stop there as a test and see where it goes. But those would be my thoughts. And so yeah. So I would say, you're right. 450. I don't know if 390 or 400. That seems like a pretty far fall. But 450, I would say would be the place to stop on the way up, and maybe 400 on the way down. But if we break it, then 390 would be the next stop for sure. So good call on those numbers. I like that. Let me see. What are on earnings call today? Actually, today's earnings calls, I don't know. There weren't money. I mean, there really wasn't much. I mean, earnings season's basically over. There's just like tricklers that are out there. I know we had Micron the other day. Cintas was today. It was either today or yesterday. I don't know. I just know the news came out today, but it sold off massively this morning. So there's really not a lot when it comes to earnings going on. So the real next earnings season starts end of January. That'll be the really big one. Lang TSLA goes up and down way more Tesla. Yeah, almost doubly. That's because TSLL is leveraged. So when you're leveraging anything, especially something as wildly fluctuating as Tesla, it's going to be crazy. So if you have trouble stomaching Tesla stock, you're never going to be able to stomach TSLL. That's insane. Honeywell is about to split off its divisions and pays 4.2. Ooh, 452 per share dividend. Interesting. Yeah, and to my dad's point here, he doesn't do percentage, and I typically don't look at yield percent. reason I don't look at yield percent is a lot of people end up chasing yield, and just because it has a high yield doesn't mean it's a good company. There are some companies out there like Walgreens Boots Alliance was one of them. There were a bunch of different mortgage REITs that weren't very good, M REITs, and like you see a very high yield, and it's, hey, you start doing math and say, hey, well, if I invest this much, I'm going to get this much of a yield. But very much like the yield max ETFs, there's NAV erosion in those. Difference with the yield max ETFs is they can fluctuate up and down, and it's kind of based off of the market, versus these other companies, which is their fundamentals have collapsed entirely, and the company is going under, just bleeding out slowly, and you're never going to be able to regain that capital. So going into those companies and chasing that yield is not a good idea, because you're going to continue to say, hey, the yield's going up. Awesome. It's like, but you're not paying your bills with yield. You're paying your bills with dollars. What kind of dollars are you bringing in? And if you're not bringing in increasing dollars, which is why dividend growth is so important to me. And that's what I'm looking at, is something over, typically, for the most part, 10% dividend growth every year. That means that my companies are giving me a 10% raise at minimum every single year. So when you're starting to look at just yield itself, it's not the greatest. There's a good combination you get there, like the long companies that are around for, dividend kings that have been over for 50, paying out for 50 years straight, like the Pepsis, the Coca-Colas, companies like that. If you see a dividend growth number, like Pepsi was around 7%, you see a number like that, hey, that's actually really good for a company that's that mature. And typically they're going to have a higher yield, right around that 3+% range. That's pretty darn good. And if you think the company is going to continue to grow at a slower rate like it is, it's a solid play to be in. But realistically, you still want to make sure that those dollars that are coming in are going to be paying out what you want it to pay out. So to my dad's point, 452 a share. And if you're looking at 452 per share, even like a Visa, who's under a 1% yield, they're growing their dividend at like 17% a year. So if Honeywell, and I don't even know actually if they show, I'll pop it up here. Let me see. Let's take a look here for you guys. So here's Honeywell right here. So dividend 452. So their yield is about 2%. That's actually still a relatively decent yield. Now I don't know. It doesn't say on here what the dividend growth is, so I have to take a look at that. But looking at a 2% yield, and if they're gonna be splitting off like that, good for them. I'd look into that. That might be something that's worth paying attention to and seeing what's going on. I'd want to see why it's splitting off all of its divisions. So I'd have to take a look at that. But could the U.S. government shut down before Christmas? No, I think they just passed the bill, and I think they avoided the shutdown, extended everything out to 2027. So I believe that all got passed through today, so it should be good to go. And it sounds like Elon and Vivek are already making an impact. They cut the bill size down significantly, cut out a lot of frivolous and unnecessary spending out of it. So it's wild that Trump's not even in office, but they're already having an impact. So, if this is how it's going to go and it's actually going to be a positive effect, I'm for it. So let's just see how this continues to play out. But it seems definitely like there's some animosity going on in there as well. So it could get ugly before it gets better. So just pay attention to that. Activists involved. Okay. All right. That makes sense where they're splitting up. Tomorrow night might be first a little, up first a little, then close down like today, 390. It could. I mean, today, we saw green across the board for most stuff today, and then it just faded into the end of the day. So we could basically see the same thing tomorrow. So maybe we do push up to 450 and then sell off. Maybe we see a reverse. Maybe we see a reversal and we see another big sell off in the morning, and then a little buying going into the end of the day. So maybe we see either a pyramid or we see a trough and come back up, and we'll see how the day plays out tomorrow. Either way, I'm going to take some buying opportunities. I'm going to spend that money and go from there. And then my next step is going to be just waiting basically till the end of the year and get myself, I may dip in a few of my favorite ones if they're, giving me better buying opportunities. Like SCHD has been great to buy in lately. So if I see a few of these opportunities, I may jump on them, but otherwise I'm just waiting till the turn of the year so I can sell off a couple of the ETFs that I want to get out of, take that cash, distribute it into other places, put some of it into cash itself, because I definitely want to get back up to that 12.5% cash range before we get into earnings season and Trump taking office, because who knows what's going to happen from there. Maybe it takes off and I miss out on that, but I utilize this as my buying opportunity. So either way, I'm going to be happy because I took the last couple of days and maybe tomorrow as a buying opportunity. And then when we get to that time when earnings season's coming, if I get another buying opportunity, I'll have the cash. If I don't get it and we go up from there, that's fine because I'm bought in, and then I'll just wait for the next cycle. So for me, it's sort of like, that's how Warren Buffett built up a lot of his wealth, is he waited for great buying opportunities and then spent a good chunk of his money then. And of course, he brought in all the cash flow and all this. So he was always ready to take advantage of an opportunity. He was never in a position where he's like, oh man, I really want to buy this, but I don't have the money for it. That is not Warren Buffett's style. So that's kind of what I'm trying to do for my own portfolio, obviously on a much smaller level. But I got caught out with it before in the very beginning when I started investing. Was there were great opportunities and I never had an opportunity to take advantage of them because I was fully invested. Now, if you're a long-term Tesla investor and you're all in and that's what your play is, fine. That's not what mine is. And I wanted to take advantage of opportunities even when it came to Tesla stock, and I couldn't, because nobody knows what tomorrow's going to bring when it comes to the market. You could do your best guess as to what the market's going to do based upon macro and the fundamentals of a company or whatever, but you're never going to know for sure. So if you get presented with an opportunity and you can't take advantage of it, it stings. And I never want to get caught like that again. So that's why I built the whole platform that I did for myself and my spreadsheet, my plan. Now I'm always ready to take advantage of these opportunities. So I have enough cash. So even if we do get a massive sell off, Q1 earnings or Q4 earnings, technically, if I get an opportunity there, I'd still have cash, but I want to have more cash. I want to be ready for that. And then that's why I'm also building up, obviously, the cash flow coming in. So even if we do get lower, I'm constantly having a flow of money going into my portfolio to take advantage of these opportunities. And again, that's why dollar cost averaging and dripping dividends in has done so well for so many people's portfolios and 401ks that aren't paying attention to it. Some of the best portfolios in history have been from people who completely forgot that they even had a portfolio, or dead people because they clearly couldn't do anything with their portfolio. They just let it do its thing. And that's where compound interest comes in with these dividends. And so when it comes to the dollar cost averaging, it's just one of those, if I was just buying every single day, regardless of where the market was at, inevitably the market's going to have pullbacks. Sometimes it's going to be short term for a couple of days. Sometimes it's going to be for maybe a couple of weeks. And sometimes it could be long term for months or even a couple of years. If you're buying all along the way, eventually that's going to average out. And because you bought at lower points, you did well. You're not emotionally panicking saying, oh man, the market's selling off, maybe I should sell too. You don't have any of that. You're buying all the time. So I set up my spreadsheet to now give me that visual as to, hey, like for instance, today, there were some stocks that were actually doing well. So I could have dollar cost averaged into them, but I had a better opportunity elsewhere because there were ones that were selling off. So I was able to buy lower in specific ones instead of just spreading that money everywhere, even to ones that were doing well. So that's why I set up my portfolio the way I did, is because now I can see everything. And when I dollar cost average, it's into the ones that are underperforming in my portfolio in that time frame. So I'm kind of buying lower for more often in my portfolio. So it's like an advanced dollar cost average for myself. But I'm getting to the point where I don't want to sell much, but I'm just consolidating. So I'm looking at, hey, a couple of things like these ETFs I'm selling off. There was a lot of fun to overlap in these ETFs with other ones that I own. I liked the other ones better for a multitude of reasons. No reason to have the money go into both. As Warren Buffett says, why would you put money into your 25th best position when you can put that money into your top 10 position? And that's kind of what I looked at was, well, why am I spreading my money into other areas, into other ETFs that I don't think are going to perform as well as this one? I'll put it into this one. And that's all I did. And that's all I'm doing is consolidating there. So like eventually I'll get down to my growth stocks. I've got both Coca-Cola and Pepsi. Do I really need to own both? Probably not. I also own a couple of ETFs that have those in it. So do I even need to own those individually, or am I going to let the ETF take it over for that? So, as we go into next year and I'm looking to consolidate my portfolio and really get it down to, a lot fewer positions and consolidate into places where I think it's going to have a much bigger impact. I'll keep you guys posted on what I'm doing there, but that's my plan for next year. And then cryptocurrency, that's another one that's selling off like crazy. And that one there is, of course, it's going to be very much like a Tesla, like a Palantir, like a SoFi. That one there swings significantly. So again, you need to be able to stomach that roller coaster. And I've been kind of playing that one as well. So like for instance, Dogecoin was going up, so I trimmed a little bit around that 44 to 47 cent range. I trimmed some there. Now we're dipping down to 30 cents. Of course, we could fly right back up and go over a 50 tomorrow. The way it moves. But that's kind of how I'm paying attention to it. So I trim a little bit off, and I take that money and I put it into either my cash pile or I put that into a dividend play that's going to generate income for me. Now, I do keep levels of my cryptocurrency as well. So, for instance, when it sells down like it does today, I can now buy into the cryptocurrency as well, and I can lower my cost basis. Now, Dogecoin, my cost basis is like 7.5 cents. So I did very well buying low on that. I think my Bitcoin buying and my cost basis is like 26,000. So I bought when everybody else was panicking. So I did a good job there. Now it's just one of those, hey, if my entire portfolio is growing, I'll just take advantage of opportunities and I'll add it into cryptocurrency as well. So crypto to me is like, I think it's like 2 to 3% of my entire portfolio. So it's a very, very, very small percentage of my portfolio, but I still wanted to be there because I want to be able to take advantage of that. I do think cryptocurrency is going to play a significant role going forward, especially, Trump talking about how they're planning on storing Bitcoin for the US. And, there's a lot of good things that are going to be going on. I think what's going to happen with cryptocurrency over time is we're going to get to the point where whatever coins are actually functionally utilized, just like, currencies around the world, that's where you're going to see the most value. You see a lot of those altcoins and things like that. Maybe they're going to have some value like a baseball card type thing, and there's going to have some nostalgia and stuff like that to it. But if there's no functionality behind it, you have to realize that you're buying into basically speculation based upon whatever, the market thinks versus a functional tool or a functional token of some sort that people can actually utilize to purchase something with. And there's going to be that differentiator that's going to be happening over the next 10 years. And just pay attention to that. I mean, until any of that happens, it's all speculation. That's all that matters to me is it's all speculation. So I look at the fact that, Shiba Inu, I don't know what it's going to do, but when Doge goes up, that typically goes up as well. So for me, I'm using it as kind of like a lottery ticket. Hey, if we're going to go skyrocketing and Bitcoin's going to end up getting to a million in the next 10 years, she will most likely end up going up significantly higher as well until we get to that point where there's actual functionality. And if SHIB isn't going to be functional, then it's going to probably end up, sliding off to the wayside. But in the meantime, that speculation could allow me to take some big profits and put that money elsewhere. So that's just a little piece of what I'm doing. Oh yeah, Berkshire B. Berkshire's great. I mean, again, you're not going to get dividends out of Berkshire. That's just not how they roll. But the appreciation of the stock is outstanding. It's not one that I own personally, but it's outstanding. My dad, you strive to buy the best or second best stock in the sector you were looking for, even if that means less shares. That's so one of the greatest pieces of advice that my dad gave me was buy the good stuff. And luckily here in the US, and I know some countries can do it, you can buy fractional shares. And if it wasn't for that, I wouldn't have been able to do what I wanted to do. And I couldn't have gotten to where I'm at now. So thank goodness for fractional shares. But and I learned the hard way, of course. I'm going to be a stubborn kid and I'm going to go and say, hey, well, I think I could do really well on this one. I speculate. I didn't know how to read balance sheets. I didn't know how to do valuation models on companies. I had no idea how to read charts, none of that. I had no education. I just went by total gut feeling. And I'm like, oh, this one looks cool. And I bought it. And then I would, of course, lose money. And there were two things that got me. There was the excitement behind it. And I was kind of just following the sentiment. And I was an emotional trader. So when the sentiment was good, I was that, hey, buy, buy, buy when everybody else is buying. And then when it was crashing down, I was like panicking. And then I would panic. So I was like, oh my God, it's going to come back. And I was constantly following minute to minute. It was awful. awful for stress, awful for all of it. And then eventually, because of my dad's wisdom and his patience, and I finally listened to what he had to say, I got into these good companies. I was like, oh my God, it's so much easier to trade when it comes to a good company. Whether you're swing trading, whether you're investing long term, it doesn't matter. Because if you're swing trading, what happens is if you buy it and it goes down, because inevitably that's what happens all the time, you buy it and it goes down the next day. You have to remember, are you trading for the next day? What is your time frame that you're looking for? And if it's a good company, it's going to come back. There's very slim chances that it's not going to come back. So if you're going to buy an Amazon and it sells off 10%, who cares? Just hold longer and it's eventually going to come back. Then you do the strategies like my dad does, where if for some reason it doesn't come back in the time frame that you wanted to, you sell it off and you use it as tax loss harvesting. Fine, but you're probably going to have other winners that you made profits on that's going to offset. So it works out perfectly fine. So it's always, always best to get into good companies. So again, like you said, get in the top one or two of a sector, you really can't lose out. And then as they're fluctuating, you pay attention. You can move money from one as you make profits in one, you move it into the other, or you take the money and you move it into a different sector altogether, depending on how the market's moving. And that's of course, swing trader mentality. But still, even if you're doing it for long-term investing and you're looking as for buying opportunities, hey, now this sector's moving down or this one's moving up. And either way, you buy into the good companies and you're always going to be much happier in the long run. Sure, maybe you're not going to get that 10x on that wild play that a lot of other people are on. Maybe you're not going to get the Shiba Inu went up and I was able to 100x my money in 6 months. Cool, man. Some people win out in the lottery. Some people go to the casino and they win big. If that's how you want to play, go for it. You want to play that gambling game, have at it. But more often than not, you are going to lose that game and it's going to suck. And for me, I just felt much better once I finally realized this. That's how I was able to take my portfolio from $600 to $60,000 in 4 years. Of course, I did add obviously a lot of my own money to that, but I think I ended up adding in like, maybe $26,000 to it. So I was still basically almost a 3x on my portfolio in the last 4 years, strictly because I was buying the good companies and kept on just building off of that. So that's just my recommendation to you guys. And this is financial advice. Buy the good companies. Just if you're going to invest, buy good companies. Honey, great advice, not financial. Yeah, I smash the like button. Yes, smash the like button, please. Smash that like button. I appreciate it. I never asked for that, so I appreciate when you guys ask for it for me. That's the best. The best advertising you can have is word of mouth. So thank you, Hanif. Lang, does Robinhood or Webull trade Bitcoin or cryptocurrency? Yes. I don't know if Webull does, but Robinhood does. Actually, all I use Robinhood for now, I used to use that for all of my trading, but with everything that was going down with GameStop and things like that, I had most of my money in Schwab and SoFi. I love now. SoFi is probably my favorite platform. I just have more money in Schwab, so it's just easier to leave it there. But Robinhood, I have all of my cryptocurrency. I do have some in Coinbase, but just for trading purposes, it's just easier in Robinhood. And I remember a while back, and I don't know if it's changed, but Meet Kevin actually did math to see, because there's always that, who's taking the most, are you actually getting the best price when it comes to when you're buying it? And he did the math on it. And at the time, this is probably a year and a half ago or so, Robinhood was given the best prices. So, for all the criticism they have gotten, they were actually given the best prices on cryptocurrency at that time. Whether they're still doing it or not now, I don't know, but they were then. And I've been happy with them with my cryptocurrency. And again, I only own the four: Bitcoin, Ethereum, Dogecoin, and Sheeb. That's it. I do my stuff through there. Very simple, very easy. It's a very, very user-friendly platform also, which could be good or bad depending on how you're looking at it. But they do have cryptocurrency on there. Yes, we all learned that way. We all made the same mistake. Yeah. And one of the most important things I can tell you guys as well is learn quickly. The faster you can learn something, the faster you're going to improve yourself. And, you can be stubborn all you want, and that's fine. And there is, truth to be told about, just sticking with your plan long term, because you may not see the results till down the road, sort of like dividend investing. That snowball could take about 10 years to really start taking off. But in the meantime, you don't know that it's actually doing anything. You have to have just faith and understand how the system works to be able to get to that point. But you also need to be able to adapt along the way for that and learn. And you need to learn these things. It's one of those stories that I remember hearing, an old adage about a pottery professor. There's an art teacher. He was teaching his students how to make pottery, and the semester started in college. And he said, "You guys are getting split into two different groups. The only project I have for you guys for the entire semester is this group over here. Group one, I want you guys to make the perfect pot. Group two, I want you guys to make as many pots as you possibly can." Group one obviously got to start and like, well, what is the perfect pot? They're trying to design it out, what it should look like, how should it be, what base should it have, how thick should the clay be on it. They're trying to figure all of that out. Meanwhile, group two is just getting to work. They're cranking out as many as they can. It's just clay going everywhere, sloppy messes. They're barely forming some pots in the beginning. It was just mush. They really couldn't get anything going. And eventually they started making some pretty decent pots. Meanwhile, group one is still trying to figure out what the perfect pot was. Now they're getting into the last week of the semester, and group one is like, well, we have to start making a pot and figure this out. So they started to make it, and it ended up being this mush pile of clay. Meanwhile, group two, who was making, as many pots as they possibly could, ended up making the perfect pot because they were making so many. And by trial and error and failing along the way, they made the perfect pot. So they learned, and the faster you can learn, the faster you're going to get to that perfect scenario. And it may not be perfect, but you're going to learn and get better and better as you go. Meanwhile, if you sit there and just think about it and not actually do anything, you're going to fail slower. So you've got to fail fast. And so, again, try a whole bunch of different things to do what you can, but learn from them. And as you learn, you're going to get so much better, and you're going to improve your portfolio significantly. Lang, yes, in Australia, I can buy fractional shares with stake in Superhero and other apps. Oh, that's cool. Okay, good. But in Taiwan and some other countries in Asia, yeah. And that's good to know, because I know I had been talking with a bunch of you guys a while back, especially when we were doing just Tesla stuff. And I know some countries could do fractional and some could not. So fractional trading is great. Otherwise, you have to use the old school mentality and learn how to value a company. Dollar cost averaging kind of takes that out, because you want to make sure you're buying into a good company. So you should still learn how to do valuations on companies. But if you know it's a good company and you have faith in it, like you're buying an Amazon or an Apple or something like that, you could just dollar cost average and you're most likely going to do well. Even if you can't buy fractional shares, save up till you can buy a whole share. And, there's one of the things my dad always taught me. I would much rather buy one share of a $100 company that is very good than 10 shares of a $10 company that is not so good and you're not sure about. So you're always going to do better with that one share. Don't get caught up in the quantity of shares. Get caught up in the quality of the company that you're purchasing. So if you save up the money to buy that, that's fine. You know, if you're doing the fractional trading, then it really doesn't matter, because you could just do smaller dollar amounts and you're inevitably going to get an averagely good price on stuff. So it kind of makes it easier. But definitely, guys, keep me posted on what countries out there do have fractional trading, because as more and more get that opportunity, it's also going to help the entire market and help investors be able to get into more of these companies. Uh, Alphabet Google is a great company with a cheap forward valuation. Thoughts? I love Alphabet, actually. I love Google. And they just started paying a dividend this year, and they started on a higher end of the payout for the dividend. Actually, I'll bring that up right now for you. Um, so I do love Google. Now there's a gap. Oh, I gotta I gotta put it on the screen for you guys to see. So again, just looking at the charts alone, Google's going to be fine long term. I don't think there's going to be an issue there, but there's a big gap that was created here, and there was some news that came out about AI and what's going on with Google. So they've had a lot of lawsuits and stuff that are going on, threatening to have, their search engine, having Chrome peeled off from the company, and to demonopolize it, whatever it is. Whether that's going to happen or not, I don't know. But there's the gap down here. But I think the company is going to do very well long term. And they've got where's the dividend? So the dividend yield, of course, it's small at 0.42%, but they just started paying out a dividend. I think this is going to be a giant dividend growth monster. We won't see that dividend change until I think it's February or March of next year. So I think it was Q1 earnings that they ended up announcing this dividend. Correct me if I'm wrong on that, but typically it's about 1 year later that they will announce the increase. So I'm waiting to see what they're going to give us for a potential increase on that. Now, NVIDIA gave us a 150% increase this past year. So that was completely wild. But I think Google is going to be something very similar to that. I think Amazon eventually in the next couple of years is going to start paying a dividend as well. They're basically the last one of the other than Tesla, um, but of the Magnificent Seven. They're like the last one that hasn't been paying it because Microsoft already does, Apple does, Google now does, Meta does, Nvidia already does. So you've got Tesla and Amazon are going to be the last two, and I think Amazon will be in the next couple of years that we'll end up seeing that. Tesla probably won't be for another minimum 5 to 10 years before they start paying it out. But I love Google. That's one of the positions I started up, and I've been adding more and more to it. So yeah, big fan of Alphabet. Dad, if you feel bad about the one you didn't buy and it soared, look for the one you didn't buy and it tanked. You will feel better. Yeah, that's something my dad tells me all the time. And it's so true. And to his point, I would much rather take a smaller profit on something than take a loss. So a profit is a profit. You won. You made more money than you had before. Congratulations. Maybe it goes back, maybe it goes up another 15, 20%. Oh well. Maybe then that's when you learn, hey, I want to be a long-term investor and I'll appreciate those gains later. There's the those are the learning moments you have along the way, and you can kind of see what kind of investor you want to be. But what he ends up doing is he'll sell sorry, he'll sell he'll sell a stock and he doesn't look back. He's like, all right, I sold it. I made the profits that I wanted to make. I hit those goals. Cool. Moving that money into something else. And now I'm going to buy this. Now I'm just going to follow that until that gets to the point. And then if the first one that he sold off comes back to a buying opportunity again, cool. He goes back in and buys that one. No emotions tied up into it whatsoever, just follows his plan and he does very well. Um, but if you do get caught up in the emotions and you see something took off, to his point, take a look at the ones that crashed, and you're like, "Hey, I missed that one." Like there was one that I sold off. I can't remember which one we were talking about the other day, or one I can't remember if I sold it off or if I just didn't buy it. Oh no, I sold it off. That's what it was. I bought it early. I sold it off after a couple of just a few days, and I was like, I was kind of getting to the point where my portfolio was getting too thinned out, and so I was like, you know what? I just brought it on, didn't want it, sold it. And I looked back and it has done very well over the last year, but so has a lot of other stuff. A lot of the companies I own did very well. So I'm like, hey, I'm not going to kick myself because I missed out on, 90% gains over there. Cool. I made plenty myself in other areas. And I looked at the dividend and they had a very inconsistent dividend payout for the entire year. Like, oh, you know what? That's actually not something I wanted to have in my portfolio anyway. So as it turns out, I'm glad I sold it off and I wasn't too upset about that. So, just take a look at the things that you could have potentially lost along the way as well. Lang, learning and listening and reading fast and lots. Best method is still DCA for me. It is. And even for me, I'm doing, like I said, my dollar cost averaging. But I still learn. And as I'm learning, I'm like, oh, maybe I can tweak my plan a little bit here. I can tweak it there. Maybe I can make it better in this way, or I could try this little bit thing here. And I don't make massive changes in my strategy anymore. I just tweak it a little bit. I try some new little things here and there. You can always improve in different areas. You can always do things like that. So that's what I do. That's why I'm consolidating. That's why I'm paying attention to things, or, checking the valuations of the companies out. Hey, is this company still as good as I thought it was when I first bought it? Hey, cool. Maybe it's better. I mean, I want to add more to it, or maybe it's not, and I want to remove it. So it's always good to learn. And actually, I just started reading again myself, Lang, and I've never been a book reader, but I decided that I've got some audiobooks that I'm listening to for self-development. And then I got rule number one. I recommend it. I'm only into the first chapter so far, but so far it's been pretty darn good. So I'll keep you guys posted on how that's going. I don't have a lot of time to read, but Hey, I'm reading, and I'm proud of myself for reading. So, Dad, you're watching. I'm reading books. so, so yes, I definitely recommend reading. Misty should be around 27 in the AM on the X, going to load up 6,500. Yeah, Misty's another one where swinging the way it's swinging. Gosh, the way it pays out. So I've got BITO. That's kind of my high yield, ultra yield Bitcoin play is BITO. Misty for me, I think it could be great. I've got Coney also, and Coney has done very well for me. I can lose all of the money. Coney could go to zero, and I'd still be positive, well over 100% on Coney. I've made so much money on them; it's fantastic. And for people who bought into Misty early, same thing. And now the question for a lot of people is going to be, are we going to see the bounce in crypto, which a lot of people are predicting? A lot of people predict we end up getting a pretty decent correction in Bitcoin. And then at that point, when you get that correction, that's when a lot of people load up, and that's when the altcoins really start to take off as well. So you kind of get that second, um, just kind of get that second wave that pushes everything up. So whether it's going to play out or not, I don't know. Historically, that's what's played out. That's what the crypto community follows, and that's what it has done. So you guys got to make the decision if you want to ride that train. So you're playing Misty in that way. If this is going to be that bounce that pushes us back up, even if we pull back down, you could get a buying opportunity there to catch that. It's up to you guys. I'm just riding it out with my play, and if it happens to do it, cool. Then my BITO, my Coney will pay out a little bit more, and I'll be in a better situation. But Misty, that sucker has been the real winner for anybody who's had that in yield max. Sorry, just got up off the floor. Yeah, me and reading. Yeah, I don't do a lot of that. Video game playing, taking in video and audio for me, just the way my sensories work. That's how I absorbed a lot of my information. Actually reading, it took a lot of time, and for me to focus on it was harder. I'm getting better at it as I get older, but for me, it was always the audio and visual stimulations at the same time to give me that information. I was able to absorb it a lot faster. So that was just how I rolled. Oh man, it's been an hour, guys. It's been a long day. My son's home too, so I've been talking to him, and I got him last night, so sleep hasn't been as good, but totally worth it. Love seeing the kid. Then we get him tomorrow night too. So I'm going to jump off here, guys. I'm going to go read some of that book. So thank you guys for hanging out tonight. Awesome as always. Keep yourselves out there, doing your best with your investing, and we will see you guys later. Thank you so much. Have a great one.